Let's turn back now to the CBC investigation we've been telling you about. 3 senior citizens bought travel insurance and thought they were covered, only to find out Canada's biggest banks rejected their claims. How did this happen, and why were they not protected? For more on this, let's turn to insurance broker Bruce Cappon, who joins me live in Ottawa. And so, Bruce, in each case, our Go Public team investigated the medical emergencies had nothing to do with any pre-existing conditions the customers were asked about. So how do the banks justify not paying for their customers' medical bills?
Well, it's quite simple, really. The insurance companies have a very powerful legal weapon in their arsenal that's granted to them by the insurance regulations. And basically it deals with a clause called the misrepresentation clause. So what happens with that is that at the time of a claim, if the insurance company determines that their customer made an inaccurate statement when they were purchasing the policy, the insurance companies can unilaterally and arbitrarily declare the policy null and void.
But that doesn't sound fair.
No, it isn't. It isn't fair because a lot of the misrepresentation could be tied back to the questions and that could be ambiguous or ill-defined on the part of the insurance company. And moreover, I think Canadians would be astounded to realize that a misanswered question, say on a bowel disorder, let's say the question was whether you've ever had a bowel disorder, and the client says, no, I never had one, and it turns out that at the time of the claim, the insurance company says, well, you had 2 benign polyps removed in a routine colonoscopy. Your answer should have been yes. And yet the claim for the medical expenses could be a heart attack or a stroke for $200,000 or $300,000.
But what I don't understand about that is that, correct me if I'm wrong, but there wouldn't even be doctors that would say that that person had a bowel disease.
That's right. That is one point. But the other point is that there doesn't have to be any linkage between the misanswered question and the heart attack or stroke, because once the insurance company declares the policy null and void based on their client's misrepresentation, it means that the policy never existed from day one, which means it means that the policy the insurance company does not have to make any linkage between the misanswered question and the medical expenses incurred, because the policy was never really there.
So so obviously you think that there needs to be some kind of remedy for all of this. So what do you think could fix this so that when people go traveling, that they've paid a lot of money for that travel insurance, they believe that they're going to be covered, they never had any intention of misrepresenting anything they answered on a questionnaire. So what needs to be done so that they can come back and actually use some of that insurance money to pay for something that happens while they're traveling?
Well, two very simple adjustments to the existing regulations. Primarily, the insurance companies, there has to be an onus put on the insurance companies to disclose equally as their clients are expected to disclose at the front end, so that you would expect that would be in the Insurance Act now, but the Insurance Act presumes that if there's an inaccuracy, it's totally their client, their customer, who is at fault. So what I'm saying is there has to be a mutual disclosure clause in there where the insurance company is providing the requisite information to the consumer, so the consumer is in a position to make an accurate answer or response to the question. And secondly, that the misanswered question should relate directly to the medical expenses incurred. Now, if you just make those small adjustments, then I think you'd see the insurance claims denied. They would peter to next to nothing.
Bruce, good to talk to you. Thank you very much.
Thank you.
Insurance broker.
Thank you for having me.
Bruce Cappon in Ottawa.